Welcome to the Cash Flow Academy podcast. I'm your host, Andy Tanner. This is where we make investing simple, and I'm so grateful to be joined by our team today. We have Noah Davidson, Corey Halliday. How you guys doing?
Doing great.
And Noah, just a brief introduction.
I'm a little hot and sweaty right now because we were just shooting hoops. But I'm Noah Davidson, and I'm excited to be here. And Corey is quite the ball player.
10 threes in a row today.
Yeah, that was pretty impressive. I'm impressed. So I've been trading and investing for a long time now. I enjoy the process. I'm a student of the markets, and I've had the opportunity to teach tens of thousands of people. I don't even know how many, honestly. It's been a lot. How to trade and invest with more confidence.
There you go. And Corey, quick introduction.
Yeah, so I got started around the same time in the markets a couple of decades ago, and just have fallen in love with the markets. I went the traditional route of working in the industry, got licensed, eventually worked my way up the ladder, and became a Series 4 option principal, which is basically the head of option trading at the firm and a risk manager. So I love managing risk, which is a big part of being successful in the markets.
And on the other side of risk is always reward. They're bedfellows for sure. So people get scared of the risk, but you know that holding risk's hand is the reward standing right there.
That's right.
Well, I think I'll tell you the difference, Andy, between an amateur and somebody who approaches the market like a professional is the amateur is always focused on the reward.
Yeah.
And the seasoned, experienced guy who treats it like a professional is always focused on the risk side.
The worst case scenario, and then you back out from there.
And then you back out from there, yep.
You back out from there. I'm Andy Tanner. Most of you know who I am, I hope. I'm a student in investing. That's the way I love to call myself a student, because then you know you're learning more, and there's an arrogance to guys that say, I'm this and I'm that. So I'm still learning, but I've been doing this a long, long time. So fun stuff. Go to yourinvestingclass.com, and we have goodies there. So make sure you click subscribe, all the things there, leave comments. But most important, go to yourinvestingclass.com and begin to learn more, and you can dive deep into a more formal setting. Today, we start off with basketball in the gym, and Corey lit us up today. He had 10 threes in a row, and so we're now ready to talk about stocks and business. There is something Warren Buffett calls a moat, and moats protect the castle. There's just certain things that no matter how bad things get, there's just a greater degree of resilience in some things than others. And so when you look at a company like Coca-Cola, for example, 2 billion drinks a day, they started in the 1800s. They've been around through world wars, and I mean, they're like bulletproof. So when I look at the necessities of life as a way to invest, if all hell broke loose and no one has anything and it's all panicked, the thing of it is the needs are still there: food, clothing, shelter, medicine, and those are the things people need. So today we're going to talk a little about food and medicine, not so much clothing, not so much housing, but there's some interesting things going on in those two sectors when you look at food companies and what's happening, and the theories behind that, and then also pharmaceuticals. So I'll start the discussion off this way. As someone who enjoys covered call writing, one of the things we always say is don't do drugs.
Yeah.
Don't do drugs. And the reason is pharmaceuticals tend to be volatile because they're high risk business. They'll pour all kinds of money into their high risk, high reward.
Yeah.
All kinds of money into R&D, and then they hand it over to the FDA or whoever to approve this stuff. And there's just a hush that comes over the room, and it's like the verdict is going to be read by a jury here. And either all that stuff becomes a big payoff or it absolutely dies. So there's quite a bit. You look at Amgen, Pfizer's not as bad, but we rattle off a bunch of them. But for options, I'm always don't do drugs. And yet I like owning some of those stocks. I've owned Pfizer off and on. I've been a little bit fickle on it. So we'll talk about pharmaceuticals in general, and then food companies are kind of established or not. You have, Starbucks, which you'd short in a, that's the first thing you get rid of is your coffee that's overpriced. I mean, I'm not a coffee drinker, but I imagine Folgers is an alternative.
I don't know if you know this or not, Andy, but it's addictive.
Is
Yes.
coffee a bit of addictive? Well,
so I've read.
Starbucks is, I mean, we've got a short play on Starbucks in the Mentor Club, I think.
Yes, that we do.
But there's other ones, Yum brands, and I've owned Kraft Heinz I'm kind of like Warren Buffett. You and I bought Kraft Heinz at the same time on that big gap down with impairment costs. So anyway, with that long introduction, we're going to talk a little bit about the food sector. We're going to talk a little bit about the pharmaceutical sector, and there's a rumor or a theory that there's a certain ripple effect going in the pharmaceuticals that actually making people eat less. So.
Yeah, and this is the big craze right now is kind of this in the drug space. They're trying, a couple of companies have some quote-unquote wonder drugs, right? So Novo Nordisk came out with Ozempic, and then Eli Lilly came out with Mounjaro, and there's a couple others, but those are the two big names, I think. And it basically curbs your appetite. And that curbing of your appetite means you're eating fewer snacks and eating fewer of these things. And it's actually having some effect in these food company earnings. And so that's probably not something, when you read a company report, they'll list their risks. They'll say we have risk of this and that, and they'll try and be as transparent as possible.
You mean like side effects may include, or are we talking about fiscal risks?
Well, I'm saying every company in their 10Ks and so forth.
I
but
mean,
they'll list them.
Noah's been watching the pharmaceutical commercials, and my kids watch those. So like, why would anyone take that? But I'll tell you what, let's digress on that just a bit, and I'll give you my thought on that. When you have a commercial with a pharmaceutical, and it says, here's our thing, and there's always just lifestyle pictures of people painting the fence or riding the bike at the beach or whatever they're doing. I mean, what else do? You show some guy with rash all over his face.
I'm walking with my friends.
Yeah, exactly. But what's interesting is they go through those side effects that sounds like it'd be worse. Yeah. I think that helps the placebo effect. Because someone's like, man, this thing must be just insane, powerful, and they're taking this pill. And, I think it helps with placebo. But anyway, we're not talking about those disclaimers. But when you have a 10Q or a 10K, which is filed with the SEC, there's always a section on forward-looking risks. And they try to do they do the minimum requirements to discuss those risks.
Yep.
And
and they'll say our risks are, that costs go up for this, or that consumers decide to go here, or whatever. But I'm guessing that those food companies probably didn't really plan for a drug that was going to come out that was going to curb appetite. That wasn't something that was commonplace and kind of anticipated, I think, by them for the last couple of years. They've had to adjust because that's what's happening. That's now the new thing, and it's becoming very popular. So all of these pharma companies seem to be scrambling. It's sort of, it's one of those things where you can see that the two companies that have that in effect, their stock prices have gone up enormously, whereas some of the companies that don't right now, Merck and Pfizer and some of them, have been left in the dust a little bit. So Novo is just straight up and down. Eli Lilly's straight up and down. So
now you were saying they were going to build a facility.
Yeah, so Novo Nordisk has announced, they just announced this week, that they're going to build a facility, $4 billion facility in North Carolina to basically ramp up production. And you don't do that unless you have demand, right?
The demand is far outstripping the supply. And I think everybody knows somebody on one of these new wonder drugs.
Yeah.
I personally know a handful. I'm thinking about it myself, all my favorite celebrities are doing it. Yeah. So,
well, is that,
who are your favorite celebrities? I can't imagine.
Pick one. Yeah. Just one, anyone. You probably got
Howard
it.
Stern or
He's on
Ozempic,
I assure you.
You pick Howard Stern, and he's like rail thin, isn't
Yeah,
he?
he's got
The
that.
proof is in the pudding, yes.
He's got that candle, the Raiders of the Lost Ark
The
face
glow-
coming down. You open the Ark, and
Yeah.
it was filled with Ozempic, and down came the melted face, right?
Side effects may include melty face and other things, sudden death. But it's probably better than obesity, which we have an epidemic in the United States. I don't know if you
There
also
is.
knew this.
Yeah.
It seems to be a problem.
I see it in the mirror every day.
It's a little close to
I
home.
mean, I want to get smaller mirrors. Just show as little as possible, because here we always have the same joke on the Casual Academy's podcast. It's the same joke. It's always funny though. And you can't go to the public pool because the tranquilizer gun comes out to see if someone can trap Bigfoot right in the neck.
I don't know if you guys.
Oh, I did it.
I don't know if you guys watched the Tom Brady roast.
No.
So there's some funny parts in it. It's pretty crude stuff. But Jeff, what's his name?
Ross.
He's Jeff Ross. He's
Jeff
like
Ross.
the roast master.
That's the only job that guy has is once a year he gets paid to roast.
That's right. But one of the girls in that
Speaking of the epidemic of obesity,
she had a great joke.
we gotta get it.
Yeah.
Then we can take that as Jeff
I don't
Ross.
think you can repeat half of
Well,
those
it was
jokes.
basically
No,
that's the
no.
joke. Is she said something about that you put the ick in Ozempic, and she said something like, it must make you feel good that it wasn't your obesity that turned women off, or something like that, because he's been taking it and he's lost a ton
has
of weight.
he really?
Yeah.
Oh, okay.
So-
Well, see, I might have to fold. I don't know.
So he's Noah's favorite celebrity, Jeff Ross.
Again, you could have
Jeff
picked the
Ross.
one, and the odds were pretty good
Yeah.
that they're on that new wonder drug. You can ask your doctor about it, according to the commercials, and he'll probably prescribe it. She'll probably prescribe it. They'll just be like, "Yeah, but can you find it?" And so that's the problem.
So supply and demand, and that's why they're going to do market research. You're not going to spend that kind of money on a facility unless you feel you're going to be able to sell some of that stuff.
You're gonna spend $4 billion. You expect to make more than $4 billion, right?
So when you look at those margins, they're tight. I mean, the problem with like Kraft, Heinz, they have the same problem as Apple. Their moat is still pretty solid. Buffett's not selling them that I've seen.
Yeah.
Their dividend is consistent, but the problem with a company like Kraft Heinz is it seems that there were some generational foods that, like my grandma, Campbell's soup, my dad, Campbell's soup, me, Campbell's soup, my kids, not Campbell's soup.
Yeah.
There is a I don't know, I don't think the word's rebellion at all, but younger people want new, different things. Kraft macaroni and cheese was just a staple.
Yeah.
When I was 18, 19, in college, that's what you ate, man. Macaroni and cheese. Now people are a little more health conscious. And so how does a company that just mass produces stuff like Kraft Heinz and all of their brands underneath them, how do they adjust to that? Do they innovate? So, it's the same problem Apple has. How do you come up with the next gadget?
Yep.
How do you come up with better foods?
And this isn't even a competition amongst food companies. I mean, it is, but it's also a competition of, well, if people are eating less, then everybody suffers, right? Then essentially, every one of these companies that produces a lot of that, you can see it impacting their stock price, and they're talking about it in their earnings results. Pepsi is a little bit more vulnerable than Coca-Cola. Coke doesn't sell as many snacks and items as Pepsi does. Whereas Pepsi doesn't sell as many soft drinks as Coca-Cola does, So, and I don't know if it's curbed the drinking of soft drinks. I'm not hearing that as much. It's more of like the salty snacks and things like that seems to be right in the bullseye of people used to eat a lot of Pringles or whatever, and now they're not.
Well, and again, you could call it.
Hey, I'm still doing my part.
Yeah.
Just so you know, Kraft Heinz. If there's a couple of rules in my house. Number one, don't talk back to your mother. Right, that's number one. Two, be kind. And 3, there better be some freaking ketchup in this house. We don't run out of ketchup.
Have you tried taking your Oscar Mayer weenies and cutting them up into the mac and cheese and then
that's
a little ketchup on top?
That's kind of rough. That's more, I graduated from that when we left grade school for sure. But I
Did
do
ya?
like Heinz ketchup on my gourmet burgers.
Ooh.
Yeah,
it's
for
good
sure.
stuff. I like it.
Yeah, we've done.
Oh yeah,
Have I
gourmet
done
burgers.
the gourmet,
Yeah.
the Andy Tanner
yeah,
special?
yeah.
Yeah.
So when I look at a company like Kraft Heinz, I've had it a long time. And when you think about selling something, Buffett says the ideal holding period is forever. And there's 2 reasons to sell. Number 1, you sell because your your stock's in trouble, the fundamentals stink, and you just try to predict the future, get out.
Yeah.
I don't care so much about the stock price, but the other one's opportunity cost. Do you hang on to that just because ours is pretty much paid for itself, which mentally, I guess, what do I care? All the money we put into it, we've gotten out of it, let it sit there, pay us a dividend. The calls on it are terrible now.
Yeah, the premiums are very low.
They're gonna get
and
worse.
what Andy's referring to there is that you can sell options and collect dividends, and once you've collected as much as you paid in, you own it outright. It's sort of like buying a real estate property for $200,000, and once you've collected enough in rent, $200,000 worth, you're like, hey, I got my money out that I put in, and that's what we've done with that stock. But to your point, that opportunity cost is, would my money be better served elsewhere? In another industry, yeah.
So let's do a little commercial. And when we come back from commercial, we're going to talk about we'll go around the horn here. What do you think about the sector? How would you like to play it? How are we actually going to make money off this information? Or is it something we sit out on? So we'll be back in a bit.
To be here at this live event just brings it all together, and I've just gained so much more confidence just being here. Love the guys, love the program, best education, not just in stocks, just financial education, hands down. The most phenomenal team of teachers. They are genuine, humble, and full of integrity. They're real, and they absolutely make you feel like that they care. They're going to be there every step of the way, and they're just amazing. That's been my experience with them.
Okay, welcome back to the Cashflow Academy podcast. I'm your host, Andy Tanner. This is where we make investing simple. We've been speaking a little bit about 2 sectors. We've got all the food, and no one's eating anymore because we're eating Ozempic.
Yeah.
Is it just filling? Is that what it is? You take a couple of Ozempic and you're just not hungry anymore?
Yeah, I think it just curbs your
that how it
appetite.
works?
I don't know the exact science behind it, but some effect is basically that it makes you so that you're not hungry, essentially. So,
Really?
Yeah, I mean,
I can't imagine not being hungry.
Yeah.
I'm hungry all the time. Let's go eat.
Well, it's hard to say because all my favorite celebrities are not really talking about it. We just know they're on it because of TMZ and the melty face. Side effects may include melty face.
Face melting.
But no, for sure. I mean, I don't know what the mechanism is, and oftentimes with a lot of these drugs, they don't really understand the mechanism, but they do see.
Well, it's FDA
the result.
approved. How bad
FDA
could it be?
approval.
How bad could it be?
Doesn't necessarily mean it's good for you. It may
well,
not.
this sort of reminds me. Do you remember Fen-Phen?
Do
I
I
remember
remember
Fen-Phen.
Fen-Phen?
Yeah. So this was
I might
back.
have-
There were some people had their heart blew
Oh,
up,
yeah.
their
heart
heart
valve
stopped.
damage for
Now
sure.
this was FDA approved, and I've got a crazy story about Fen-Phen, which is I actually profited off of it on accident. So I had some out of the money puts. that
every
I
time
owned.
he makes money, it's like Rob.
Yeah.
Rob was short American Airlines over 9/11, made like $200,000 overnight
On accident,
And
yeah.
he's like on it. Here's like, yeah, all these people died, but it was an accident. I made money on this.
Well,
Look at that disclaimer.
I owned some out of the money puts on like Pfizer, and this was, I want to say it was like 2004, 2006. I don't
20 years
remember
ago.
exactly. It was 20-ish years ago, and this was, I want to say that it was Merck that they.
Were they protected
Essentially-
puts or just speculation?
I think what I remember is that I had owned a spread and I had bought back the short puts, so done a bull put credit spread.
come on. You heard someone's heart
So-
blew up and you bought puts.
No, I just had them, and they were expiring in like 2 days at expiration,
Oh,
and
so
they
you
were
got
way
lucky.
out of the
You did
money.
get lucky.
And some news came out that Merck was going to have to pay some odd $1 billion in class action, whatever. And Pfizer went down in sympathy because they had the same type of risks and same type of drug and so on. And those puts that were out of the money, I mean, the huge gap were worth quite a bit. Now, obviously that's a scenario where I'm not trying to profit off of the demise of individuals.
We know you're a good guy. And we also know that, look, let's just, every once in a while on the podcast, we figure he lets this little slip out that he's running the Illuminati.
Yeah.
Corey's a full-fledged member of the Illuminati. Just lets these little things out.
Oh, you haven't been initiated yet?
Noah and all of his favorite celebrities have now joined me.
How do you think I network with these people?
They don't let me in. I weigh too much. You got to have a certain BMI to get in the Illuminati.
We're going to get you on
Ozempic. Ozempic.
Those guys in the Illuminati, they're always skinny, frail dudes with maniacal laughs. Now some big, Chris Christie ain't in the...
Andy, have you asked yourself why we came up with this idea?
Are we going to get canceled for fat shaming now?
We're going to try to get you in the Illuminati.
Look, I don't need anybody helping me with the fat shame, okay? I'm doing just fine on my own.
It's terrible. We shouldn't do it. But hey, if you're a public figure, it goes with the territory. So if you want to fat shame me, go for it.
That's right. I mean, this would be the risk, though, is that we don't know what the actual side effects are down the road,
like
right? Right. I mean, what if there's heart problems? What if there's, and I'm a believer in the healthcare community as a 2-time survivor of cancer. I'm like, hey, I know that they do their research, that they're trying to produce. I mean, as one that has survived because of chemotherapy and radiation, I'm not anti-drug by any means, but of course, the better situation would be to not need those drugs, right? The healthiest solution is to not need to inject anything. The next best solution, though, for some people might be to take those because the obesity issue might be a bigger health scare. And so we just don't know. I mean, that's the big risk to these healthcare companies, though, is what could go wrong with
diabetes. Isn't that interesting how diabetes is important to your bottom line? It really is. If you're a healthcare company and you took down heart disease and diabetes, it would affect your bottom line. It just would.
So you're profiting from these new drugs, but it might hurt your sales on the other drugs.
Or it might cause kidney failure.
And you get sued. I mean, that's...
So let's talk about investing, though. To me, all right, let's go around the horn like we promised. Would you, I'm excited about AI, and I still like my foods. I like the food as a staple. I think we're always going to need it. I think the food companies figure it out. I think they innovate. I don't think Ozempic can take down, PepsiCo or Yum brands. But where are you investing wise? Do you see opportunity in pharmaceuticals? Do you like that? And specifically, the companies that are offering the face melting magic?
I'm okay speculating with pharmaceuticals. They say don't do drugs, but as long as it's just recreational, and you have an exit strategy, I don't mind.
What could go wrong?
Well, I mean, if you limit your risk, then you can probably speculate. I don't like owning them long term because of that same. I've seen them do the oscillation too many times. When I'm thinking about capital gains, if they pay a dividend and they've got a big moat around it, that's another story.
Noah's wife's from Colorado, and they were the first state that made this recreational stuff. I'm really having questions now. But the thing is, I don't know, Melanie, would she instigate that? I think Noah would be the instigator of this recreation.
I'm usually the instigator of most things. She's
the voice of reason. So you
don't mind recreationally. You're not
you're
going to trade it, but you're not going to own it.
Right. I'm probably not going to type a bunch of capital to do it. I like to use options to create a little fixed risk leverage, things like debit spreads or butterflies or things where I can say, okay, here's my expense. I know the risk going in. If that trend plays out, I can hit a home run or I can hit a double or a triple. As for investing, again, if it has a good moat, I have owned and held those stocks in the past, but sometimes the volatility with them it's a little bit more difficult to manage. And it may, again, opportunity cost is always a thing. If you got your money tied up, I could possibly be using it elsewhere.
The problem I have with it is I'm probably out on these because, there's, as I've gotten older, I've tried to, and I don't know if I've tried to or if it's just happened naturally, but the idea of FOMO to me is there's less and less FOMO in my life, you know, because if you have a plan that's kind of plugging along and going well for you, I just don't know that you screw up that plan. And crypto's cool, I guess, and there's going to be some dude that makes a lot of money and some guy loses his shirt. But I kind of like the moat stuff. So I think I like the foods better than the pharmaceuticals, because remember coveredcalls.com? Remember that?
Yeah, I do. There's a lot of drug companies in there.
It's exactly. If you go to coveredcalls.com and you say, I want the most premiums, 4 out of 5 are going to be pharmaceutical companies with the fattest premiums. And that's not how you invest. So here's your lesson. If you get anything out of this, with lots of reward comes more risk. And those premiums are so large because you're buying insurance or selling insurance, with underlying risk. And so I just think they're more apt to have to be managed, or maybe I'm just lazy.
9 out of 10 doctors agree that. I want to know what the 10th one had a problem with, really. Yeah. I'm a bit of a contrarian.
9 out of 10 doctors agree. What did the 10th one say?
What was his beef?
Yeah. Was he a mask guy or a no mask guy?
Or was he the whistleblower? Hard to say. Again, these are unknown long-term things. Well, you can kind of compare and contrast that back to the concept of the fast food companies, the processed food companies, where if demand is down because of the drug, I think it's a twofold thing. I think it's inflation. The cost of those foods has gone up. And then if you've got an appetite suppressant out there that's also helping people resist temptation.
Rough spot.
I think, again, it's kind of risk reward. And I think that's a very safe thing to say, that there's going to be a trend. I think it's one of those things where if you can spot the trend and you know how to position yourself without over leveraging, without taking too much risk, there is potential to profit off of any trend. If there's an uptrend, and what is the name of the company again? Novo Nordisk?
Yeah.
Sounds like a new something or other.
It sort of sounds like what was the old thing that you used to do on the treadmill or whatever? Wasn't that something but that's not Novo Nordisk.
The Nordic
Nordic Track. That's sort of what it sounds like. But
the Nordic, the Novus.
Yeah, but I mean, it's if you got that out there and people are going to use it, there usually will be a price run on the stock and potential for capital gains, which is usually, again, a short-lived, may last for a quarter, may last for a year. You don't really know. On the flip side of the coin, there's been a lot of bearish opportunity in the fast food industry and in the restaurant industry.
There's pain.
And there's pain there. And I wouldn't bet against McDonald's long term. I wouldn't bet against Wendy's long term. Well, maybe I would. I don't know. But there's been this downtrend where
it's temporary.
Luxury. It's become a luxury.
Hey, it's a sign though. That's a sign, because I had a buddy of mine. He said, "We'll never go in the restaurant business." And the other day, about a year ago, he said, "Hey, why don't you come down? We'll go to my restaurant."
Oh, yeah.
I'm like, "What'd you do?" He goes, "I bought a hotel and it has a restaurant in it." I go, "I guess you can justify that."
Yeah.
But people are going to cut that stuff out. So if you're looking for resilience and you're looking for, safety, I guess, a flight to safety, I don't know.
Yeah.
Let's get your comment, Corey, and then we'll wrap it up.
Yeah, I think one way that you can go about the healthcare space with a little less risk, because like we talked about, there's a lot of volatility. If a biotech company is going into an FDA decision, that stock could gap down 50%. It could be cut in half overnight very easily. So one way to diversify but participate in the group would be an ETF. Like XLV is the healthcare ETF. Now, if you own that, you own Pfizer, Merck, AbbVie, you own Novo Nordisk, you own all of these healthcare companies as one basket under that symbol. And we teach about ETFs and how to do option trades off of ETFs and things like that. And I think that's a way that one could diversify. So now if there is risk in that healthcare company and one goes down, another one's profiting, it kind of manages that risk for you. So that's a potential way to play the space that I think is less risk.
So you're saying trend. You're kind of Buffettish too. You don't have much FOMO. You don't have much FOMO either. But your
Well,
celebrity friends.
I don't have a lot of FOMO because I usually take position sizes I'm completely comfortable with if it goes against me.
Yeah.
So again, I don't have a lot of fear because I'm just sticking my toe in the water, and then if I win, maybe I add a little bit, but only add to winning positions. And again, the trend is your friend as long as you know how to position yourself intelligently.
I think it's a big deal that, let's say that if you're going to buy the pharmaceuticals, let's say someone's watching and says, hey, I want to, if they're building a multi-billion-dollar plant, they're planning on making a lot of money, fads catch on, it could go big, whatever, they want to ride this. I think the thing you watch out for on those is earnings, and then if there's FDA approval. I don't know how those are planned. I don't know. Do they announce that stuff? I've never really done a lot.
Yeah, they will announce that they're going into different phases. So phase 3
2 trials.
Phase 3 is like the big one where it's kind of that make or break type of scenario, and so. But they'll announce that, hey, it's coming up on such and such a date. And that's where you'll see those option premiums be sky high because everyone knows, okay, this drug could make or break this small biotech company. The nice thing about the bigger pharma type stocks is they're reliant.
Diversified out.
Yeah,
enough.
They're not reliant on one drug.
I don't freak out about Pfizer. That's the one I own the most.
If it doesn't get approval for something, well, it's got a lot of other things that are working. And you also have to be aware that drugs go on. So you have access to selling your drug and it's on patent for X amount of time. And then everyone can do it. And what do they call those? Generics. Yeah. So then all the generics come in and now you've got that competition. And so this was something with Pfizer and Merck, and something that they have to always deal with is, well, when does that drug run out of its room, and we need to get other drugs to fill in the gaps to pick up the slack because we're going to lose a lot of sales when that goes off patent.
When they lose their patent, for sure. So check that stuff out. If you don't know how to do a protective put, that's an important one to know how to do. I like the food space because I think it'll adapt. I think it'll adjust. It'll have its ups and downs like it always has.
It's in a downtrend now, which means there's going to be an investment opportunity to buy more.
Yep.
So I like to, I like to trade the trend on the way down. And if it's a company that's got, fundamental strength, long term, it's like a real estate holding company like McDonald's, for example, I wouldn't bet against it long term because that's kind of their empire, right?
Kraft Heinz is a good example of that strategy. Is when they gap down from 70 to 30. That's almost, it's cut in half almost. And Corey and I saw that and like, Buffett's not selling. Well, if I look at the company, I just think it's going to be around. I think they own Oscar Mayer, they own Ore-Ida, they own Kraft, they own Heinz, they own TGI Fridays, and they also own Weight Watchers, which is telling people not to eat their own stuff. So they're selling their healthy foods, I guess, and frozen.
You see, Andy, in the Illuminati, we own both sides of...
You protect yourself on both sides of the equation.
We sell ammunition to both sides.
That's exactly how it goes.
So I don't know. I think that, like you say, Noah, when it drops, I wasn't so much buying Kraft Heinz, because I thought it was going to rise. I just thought to myself...
Because he puts an addictive chemical in it that makes you crave it fortnightly, smart ass.
But I'm serious. I looked at that price. I'm like, if the dividend holds even close to where it ought to be, and you can write some options on it, that thing's going to pay for itself no matter where it goes, and you have an income-producing asset forever, because ideally you don't want to sell it. So it's not so much that it fell and I'm buying low thinking it'll go high. I'm just buying low thinking that thing will pay for itself with option writing over the long term. So I like the foods, obviously.
Yeah. And a lot of them have access to other things. Like a Pepsi, for example, it's not just selling snacks. It's also selling soft drinks. It's got a lot of other areas of the market that it can participate in. And, that's with most of those corporations. I mean, Kraft Heinz is a big conglomerate of a variety of different brands. So it may be
largest in the country.
Yeah, and it may be hitting some brands harder than others. And that's where you kind of have to look at it and say, okay, well, what's that going to do to their earnings and their revenues, and how big of a hit is this to the sales, and make your investment decisions from there.
I love owning food though, also because if I still think it's a flight to safety because you got to eat.
Yeah.
I mean, you can have all the Ozempic you want, but eventually you're going to have to eat. I mean, I would imagine. I don't know.
Well, I mean, healthcare is traditionally one of the recession safe havens that people will go to. Consumer staples, healthcare, utilities,
stuff like that.
Because it's on that lower end of Maslow's hierarchy of needs that we're always working on. So
yeah, even if you're in an economic recession, you might bypass the Harley Davidson, but you're still going to need to buy your food and your medicine. And
Speaking of, we shouldn't digress, but do you short Harley Davidson because kids aren't going to buy motorcycles? I mean, I think I'm the last generation.
I don't
that
know.
Want one of those.
Maybe, but
what is Jonah looking at Harley already? He's what, 7?
I don't know. But Harley Davidson has the single best ticker symbol of all time.
Hog.
Yeah. Pretty good ticker symbol. I just don't know. Their merchandise is cool, but I don't know if it's cool for the younger generation. I mean, do you see any? You got a few Generation Xers might throw on a headband.
Yeah,
All the cool kids are buying Indian motorcycles
Look,
these days.
anyone that watched, who knows who Arthur Fonzarelli is? Okay, we got a shot at a Harley, but now his was probably an Indian anyway.
Yeah.
What kind of?
Did he drive a Harley?
I don't know. It was a Honda.
I'm embarrassed that I don't know what Fonzie's motorcycle is. I mean, that should be like, that's part of your man card, isn't it?
I don't know.
Knowing Fonzie's motorcycle?
We all failed that test. I don't remember.
Boy, we better Google that.
Yeah.
But if you weren't a Fonzie fan, if you're saying who's Fonzie, man, you don't care.
You're not going to buy a Harley.
It's the old coward coach and the water boy. That's where he's at now.
It's the best thing ever.
All right.
I did like the flashback to the KFC. There.
Did you like that little quote from So I Married an Axe Murderer?
Yeah.
The Colonel with his wee beady eyes.
Oh my!
You're gonna buy my chicken?
The Queen, the Vatican, the Rothschilds. I've seen that movie 100 times.
I've never seen it.
You've never seen it?
You haven't? That's great.
I don't watch Netflix.
This is like from the 90s. It would have been like a Blockbuster
video.
This
like,
is old enough.
Well, I didn't hang out at Blockbuster either.
This is an old enough movie. I'm surprised you haven't seen it.
People browsing the aisles at Blockbuster, man.
It was always rented out.
There you go. Hey, great stuff on the Ozempic call. Trade what you want to trade, but if you do, make sure you understand options. I wouldn't trade a stock without an option, so make sure you get your education on that. You've been listening to the Cashflow Academy podcast. Go to yourinvestingclass.com for more goodies. Make sure, if you haven't done that, then click it. Check it out. It is phenomenal stuff there. So check that out. And I thank my guests, Noah and Corey, as always. It's a fun team to be a part of. We'll see you guys next time.